Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Donald Trump's historic political comeback. Republicans are now on track for a clean sweep of the White House and Congress, with Democrat hopes fading of flipping the U.S. House. Asian stocks fluctuating as investors position for a second Trump presidency, with its promise of steeper tariffs and a stronger dollar. Israel's Prime Minister Benjamin Netanyahu was amongst the first to congratulate Donald Trump on his election victory. We look at what Trump 2.0 means for the Middle East. Well, everybody, it has just gone 8 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. I've got to say, the last time I was here, things were looking a little bit different. There has been a substantial change in how the world is viewing the next 4 years, with the somewhat of a surprising comeback of Donald Trump. His re-election to the White House is going to really shape things up in the next few years in terms of regulation, policy making, tariff talk, and of course, when we look at global financial markets, there are going to be major repercussions there. So let's just start our show off taking a look back at some of the price action that we had yesterday, because we had some stunning moves. If you look at U.S. equities, we saw a big close for the S&P 500, up 2.5%. In fact, this was the biggest gain for the S&P in a post-election day in history, up 2.5%. So very, very, very positive. NASDAQ 100 also up 2.7% as well. Many people talking about the potential and scope for further deregulation in that space, in addition to the possibility of corporate tax cuts, which is something that Trump has spoken about on the campaign trail. Looking even further, if you dive deeper, Russell 2000, this is the index for small caps. Massive day yesterday as well, up 6%, again, on some of those similar themes playing out, and perhaps another fiscal boost, a cyclical boost for the economy coming in 2025. And then take a look at what happened to bank stocks yesterday. This is the KPW index, up more than double digits, 11%. The likes of JP Morgan, Goldman Sachs, up 12%. You have some analysts in the space talking about the potential for a capital markets super cycle coming up. Why? Because of anticipation of deregulation, further deal making that unlocks opportunities in terms of IPOs and the private equity space, which again has been talking about some of those challenges in getting to exit. So that may all change in the coming years. Flipping over, the winners were on this page, but I just want to start off with one of the losers from yesterday, and this is the S&P Clean Energy Index, down 6%. Again, here, concern that Trump may remove subsidies for some of these clean energy sectors, for renewables, remove subsidies for electric vehicles. That had an impact on that index. So again, a lot of red on some of those names, particularly the names exposed to the clean energy transition. 10-year yields, massive moves yesterday as well. We moved up about 25 basis points, sitting at 4.43%. This, and we can talk about this on the show, as the market pencils in larger deficits moving forward, perhaps a higher debt profile for the U.S., in addition to this growth boost, fiscal boost, and also, on the back of that, potentially a Fed that will have to be more cautious on rate cuts given some of these inflationary pressures to come. So that's what happened with U.S. yields. The dollar, massive day yesterday. Even though we're moving a little bit lower now, down about 0.8%, we had the best day in the dollar since 2022. The index was up 1.5%. Euro saw its biggest slide since 2016 yesterday. Growth prospects between the European continent and U.S. continent being factored in there. And then Bitcoin. Look at Bitcoin, $75,000. Yes, we're a bit lower today, but massive gains yesterday, more than double-digit gains, and an all-time record high. The Bitcoin community, crypto community, were really angling for a Trump win. It came through, and it's good for that sector. So that's a look at some of these markets. But for now, let's take a deeper dive into Asia. Lots of people have been talking about how these tariffs, the proposal of tariffs, could impact some of these key Asian markets. Luckily for us, Yvonne Mann is there and is going to tell us about how these markets are doing today. Yvonne.
Yeah, we were thinking these Trump trades that basically went euphoric, as you showed overnight, that would actually be a headwind for Asia. That stronger dollar, that higher yield story that we're seeing across treasuries, that's starting to actually reverse a little bit in the Asia session. So we're actually turning a little bit more positive for Asian stocks in the last few hours or so. Much of that has been driven by this rebound that we're seeing in China, which really felt the brunt of it yesterday in Hong Kong markets, where we saw more than a 2% decline on that tariff threat. Seems like that dollar drop that we're seeing today is spurring some dip buying in the equity markets, and you are seeing now an upside about 0.7% on the CSI 300. Part of that narrative means that maybe if now that we see a Trump win and that terror threat, that China's going to have to step up when it comes to fiscal stimulus. And so we are counting down to that MPC meeting to wrap up tomorrow for any signs of maybe we'll see something in terms of consumption boost for China. We also got those export numbers out of China just about an hour ago, pretty favorable as well and beating estimates. So that may be helping the equity story there. And that's how we are seeing that reversal in dollar rep China after we saw the biggest drop yesterday in 2 years for the renminbi. There is some traders telling us that state banks have sold the dollar to support the onshore rate. So that certainly is leading to a bit of a rebound in dollar China, dollar yen as well. Ministry of Finance officials talking about these excessive FX moves post-U.S. election. So they are seeing a little bit more verbal intervention into the currency here this morning, Jumana.
Yeah, so much going on. I almost forgot that it's Fed Day today as well. So we've got the NPC Standing Committee and the Fed to watch out for short-term drivers. Bloomberg's Yvonne Mann in Hong Kong. Thank you so much. Well, Vice President Kamala Harris has publicly conceded defeat to Donald Trump. She spoke in Washington a day after the Democrats' crushing loss, urging her supporters to accept the results.
Earlier today, I spoke with President-elect Trump and congratulated him on his victory. I also told him that we will help him and his team with their transition, and that we will engage in a peaceful transfer of power.
Well, for more on Trump's re-election, Bloomberg's Vonnie Quinn joins us from New York. Vonnie, just a stunning outcome. And once again, it seems like the polls missed. And the question that many people are asking, and no doubt the Democrats will be doing a lot of soul-searching at this point, but what is it that actually allowed Trump to pull off such a big victory? What were the demographics that propelled him to this victory?
The straight answer, Jumana, is all of them. He made gains in every single demographic, from Latin men to African-American men, even the older women that were supposed to come out and support Kamala Harris, or the stealth vote for Kamala Harris, right, even if their husbands weren't voting for her. That didn't materialize. So he made gains in just about every demographic, and also in geographic areas like urban areas, which was not expected. And where she won, she didn't win by as big of a margin as was anticipated. So the polls did underestimate Donald Trump for a third time, it should be said. Frank Luntz, a respected pollster, told Bloomberg that what happened was every Trump supporter became a Trump voter, but that wasn't the case for Kamala Harris. Not every Kamala Harris supporter or Kamala Harris curious person turned out to be a voter for Kamala Harris. So with that said, you did see the sweep of all the swing states for Trump. You also saw the Senate flip Republican, and we're waiting on results from the House. That could take a few more days, including recounts. It might even take a couple of weeks. Several of the seats that are toss-ups now are in California, and it's important because at the moment Democrats have control of the House. They want to keep that control, so there are at least some checks and balances on what will now be a Republican administration and a Republican Senate.
Well, very much the red wave that people were anticipating last time around has actually manifested this time. Bloomberg's Vonnie Quinn in New York. We'll circle back to you later as well. That was Vonnie Quinn. Now, over in this region, Israel's Prime Minister Benjamin Netanyahu was amongst the first to congratulate Donald Trump on his return to the White House. Officials and analysts think Trump's victory gives Israel an opportunity to press on with wars against Hamas and Hezbollah and to potentially strike Iran's nuclear program. Trump has repeatedly voiced his opposition to long and costly wars and has previously called for a speedy end to conflict in the Middle East. So for more on this, Paul Wallace joins us now. Paul, well, Netanyahu and Trump know each other quite well. They've obviously worked together very closely over the years. And I thought it was really interesting yesterday that I believe the Israeli Prime Minister was actually the first world leader to formally congratulate Trump on his re-election. What does that tell you about what we can expect from U.S.-Israel relations moving forward, and how is that going to impact the ongoing wars in the region?
I think it was quite telling. I think it says a lot about Benjamin Netanyahu. As you said, he worked very closely with Trump during his first term. They mostly got on very well. It was only right at the end when Netanyahu congratulated Biden for his victory in 2020 that they had a bit of a fallout, but mostly they had strong relations. Netanyahu knows U.S. politics extremely well. I think he clearly realizes that one of the best things to do when it comes to Trump is to flatter him, to flatter his ego, essentially, to praise him quickly, to make it effusive and all this kind of stuff. And that's what he's done. It's obviously, for Israel, this is one of the, in terms of the Middle East, I think for Israel, this is one of, yesterday's result is perhaps especially significant from Israel because of the wars, the multi-front conflict that it's fighting right now. It's a little bit unclear still exactly what Trump will mean for the conflicts in Gaza and Lebanon and the Iran-Israel tensions, but certainly the Israeli establishment and Netanyahu himself are very, very happy that Trump won. Yeah. This is very much what they were hoping for.
I mean, if you just go by what he was saying on the campaign trail, he was saying Israel needs to finish the job and they need to finish it quickly. At the same time, he was appealing to some of those Arab American voters saying, I will bring you peace in the Middle East. I will return this region to a region of stability. He says that, but at the same time, also has been historically very hawkish on Iran, and there is a perception out there that the U.S. may actually impose harsher sanctions on Iran or even give Israel the green light to hit Iran, and possibly there's talk of nuclear facilities this round. So on one hand, he's talking about stability, but on the other hand, he has been quite hawkish on Iran.
Very much so. I think if there's one country that Donald Trump doesn't like, it's Iran. And there's a lot of talk about whether he will go back to his policy of maximum pressure against the country, which was extremely strict sanctions and enforcement of those sanctions, which is something that Biden was accused of not doing. And there is also talk that the Israeli government will manage to persuade a Trump government to sort of take part in some kind of military activity against Iran's nuclear facilities. But as you've mentioned, at the same time, Trump and J.D. Vance, the incoming vice president, have spoken about how they don't want war. And about 10 days ago, J.D. Vance was very specific and said that the U.S. does not want war with Iran because it would be too much of a distraction and too expensive for the U.S. So it's quite complicated to figure out what will happen.
Well, maybe the art of the deal will prevail. At this point, we just don't know. Paul, thank you so much for that overview of how a Trump re-election is going to impact the region. That was Bloomberg's Paul Wallace. And in local domestic news, Israeli Prime Minister Benjamin Netanyahu has appointed former Foreign Minister Israel Katz as defense minister. That is after Netanyahu fired Yoav Gallant on Tuesday night, citing significant gaps of the conduct of the war in Gaza. Katz's appointment is widely seen as an attempt to conduct military policy with fewer obstacles. Gallant's removal has deepened anger amongst Netanyahu opponents who accuse him of prioritizing his political survival over the nation's security. And still ahead, hear why Banque Syz says a Trump victory is positive for U.S. GDP growth and company earnings. More on how the election result is impacting markets next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Dubai. Most Asian stocks are lower this morning as investors weigh the market ramifications of a second Trump presidency with its promise of steeper tariffs. Meanwhile, traders are also looking ahead to the Fed's rate decision, which is widely expected to be a quarter-point cut. Let's bring in Charles-Henri Monchau, CIO at Banque Syz. Typically, I would start off with a preview of the Fed, but I'm not going to do that today because other things have happened in the last 24 hours. Let's just start maybe with the stock market reaction and what you make of this very positive outcome to equities yesterday. Some people are saying that it's simply the removal of uncertainty because there was some fear in the market that perhaps we could be sitting on a protracted, held-up election result, but it all sort of packed up for quite quickly yesterday morning.
Yeah, very rare to see a new all-time high with a move on the S&P 500 higher than 2.5%. The last time it happened was March 2020, so a long time ago. I think you're right. Well, at least we have a winner, because that was not a given. Two, he is pro-business, so probably explain why there was so much, let's say, enthusiasm yesterday. And also the positioning of hedge fund managers or traders just ahead of the events was adding some protection, cutting net exposure. So now they are back into, let's say, long positioning. Usually when there is a political event, the trend which was prevailing before gets extended. So it's quite, let's say, natural to see that. Doesn't mean that we know what will happen in the next 12 months, but at least in the short run, there is indeed some enthusiasm.
I thought the reaction in banking stocks yesterday was pretty impressive. You have the likes of Goldman Sachs, JP Morgan up more than 12%, KPW double digits as well. Some people are talking about a capital market super cycle because it is the perfect, actually, outcome for many of these financials. The economy is still doing well. At the same time, you're talking about deregulation and tax cuts. Do you think that trade has more to go?
Yes, because there is also the M&A story.
Yeah.
I think we're going to see a lot of M&A. So if you add it up, there is indeed, let's say, a very strong trend for this sector. It's probably seen as the biggest winner of this Trump trend. But again, I think we need to be a bit careful. Maybe the markets is a bit front-running what can happen because it is going to be very uncertain. So let's not, let's say, go ever excited by some of these things.
Yeah, well, that's the thing. I mean, one of the questions people are asking is whether Trump's policies are adequately priced in. I mean, it's impossible to say at this point because we don't really know what's going to be actioned versus what he's been talking about. But one angle I do want to bring up with you, again, massive moves in bond markets yesterday, huge there. And I just wonder whether that's to account for, is it higher growth? Is it higher deficits, or is it the fact that Fed will probably have to be more cautious on interest rate cuts moving ahead?
It's a very good, let's say, explanation, combination. Also, higher uncertainty, because you've probably seen, you know, the bond volatility, which keeps moving higher. There is maybe one contrarian view I would like to add here, is one, maybe this fiscal deficit story is a bit overpriced. Maybe we'll get some good news because the tax receipts might be very strong next year. And also, let's keep in mind that one key political event coming is 1st of January. We have the debt ceiling coming. And usually when there is such events, you get a liquidity bazooka. It could be around $750 billion. And there is high correlation between this liquidity bazooka and the bond market. Usually it's positive for the bond market. So at least maybe because of these events, which looks a bit counterintuitive, we might get a cap on the long-term bond yield. If not, then there is an issue. Because the higher the bond yields will go, the more pressure it will put on equity valuation, and that could create, let's say, some consolidation on the equity market.
Okay, something to think about then as we head into the new year. It seems as though maybe, you know, under Trump, we're going to get this U.S. exceptionalism mantra again. Obviously, he is a big proponent of America first. What does that mean for the rest of the world, and particularly Europe? Because we saw massive downtrade yesterday for the euro. People are concerned about growth. Also now the German news as well. You know, you've got political things going on in the background in France and Germany. The prospect for the European economy doesn't look great right now.
Well, Europe has been, let's say, under pressure for some time now, so it's just going to extend a trend, which is Europe is struggling. It's a double whammy, because indeed tariffs are coming, and also they will be under pressure to spend on the defense side.
Yeah.
So that creates, let's say, you know, new pressure for Europe. Maybe just to add a small positive note, we know that usually Trump does what he says, but there is also some negotiation tactics here. So maybe, you know, what he has been announcing on the tariff side is also one way to go to the negotiation table, and maybe we could get some positive news on that front. I think that's the only positive angle, is that maybe there are some tactics. But definitely, on our side, we continue to see Europe struggling. It was a trend in, let's say, existing before Trump, and it's probably going to get extended.
Yeah. Well, we're going to have to leave it there. Always good to chat with you.
Thank you
on
so
that
much.
Positive note, Charles-Henri Monchau, CIO at Banque Syz, talking us through how he sees the market reaction to the Trump re-election. Well, coming up, Tesla shares surge on bets that Elon Musk's backing for Donald Trump will benefit the company. We'll look at the wider tech industry's fears and hopes for Trump 2.0 next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Donald Trump's return to the White House may bring a vastly different relationship with the U.S. tech industry. Trump plans to undo many of his predecessor's policies, including an executive order on AI, with Elon Musk also poised to play an influential role. Let's bring in Bloomberg tech reporter Newly Purnell, who joins me now. Well, we saw Elon Musk on the campaign trail with Donald Trump, and other tech names have been in the news recently as well. Feels as though many of these tech titans are feeling quite good following Trump's victory. What is the expectation there?
Yeah, I would say so, especially if you're the world's richest man, Elon Musk. Of course, he was very much front and center in Donald Trump's campaign, appearing at his campaign rallies, donating his own money. He even took to X, formerly known as Twitter, to say that usage was up on the platform. We mentioned earlier Tesla shares are up, positive for him. I think another theme we'll be watching is antitrust. Will FTC Chair Lina Khan go? What does this mean for scrutiny of U.S. tech titans in the U.S.? What does it mean for potential mergers and acquisitions? And then on AI, huge theme driving so much growth in the tech sector. Will Trump do away with the executive order that President Biden has put into place, imposing safety guardrails on AI tech development? So that's what we'll be watching, those themes.
Yeah. Yeah, so, I mean, that all sounds fairly positive, and the key here is the word deregulation. Are there any potential challenges looking ahead for some of these businesses and these big companies and the tech titans who are throwing their weight and support behind Donald Trump right now?
For sure. Well, Trump has been highly critical of the CHIPS Act, which is, using billions of dollars to try to spur development of the U.S. domestic chip industry. What will happen to companies, who are betting on getting some of those funds? And then, of course, Taiwan, massive location that's important in the global chip industry. He's been critical of Taiwan, saying that they've, taken over, stolen U.S. chips business. What will happen there? And then tariffs, a word that Trump has used a lot. If U.S.-China, trade tensions increase, what does this mean for companies like Tesla or Apple, for example, who do a lot of manufacturing in the mainland? So largely rosy, but certainly some challenges potentially ahead.
Yeah, very clear. Nearly Purnell, thank you so much. And again, it's very clear that the return of Trump is impacting so many different industries and sectors. That's just a look ahead for the tech industry. Let's take a look at how global markets are faring now this morning. I spoke about the massive day for U.S. equities yesterday. Very strong performance on Wall Street. This morning, futures are leaning towards the green, up about 8 basis points or so. So still inching towards the green. European stock futures, however, are seen opening slightly in the red. And there, of course, growth concerns are being factored in. Well, coming up, Donald Trump. We are going to be talking more about his victory promises to shake up the U.S. energy and environmental policies. We'll discuss what impact it will have on policies he's dubbed the new green scam. This is Bloomberg. Good morning again. This is Horizon's Middle East and Africa, our top stories this morning. Donald Trump's historic political comeback. Republicans are now on track for a clean sweep of the White House and Congress, with Democrat hopes fading of flipping the U.S. House. Asian stocks fluctuating as investors position for a second Trump presidency, with its promise of steeper tariffs and a stronger dollar. Saudi Arabia is planning a new multi-billion-dollar AI project as it seeks to rival the UAE. It has just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. We continue to track some of these market moves into and overnight with the news that Donald Trump has been re-elected back to the White House. And this was the close for Wall Street yesterday, a new record, a new all-time high, and the biggest post-election day jump ever for U.S. stock markets. S&P up 2.5%, NASDAQ up 2.7%. We're just talking about the potential positive impact deregulation and likely further tax cuts could have on some of these names, particularly in the tech space. The Russell 2000, also this is the index for small caps in the U.S., up 6%, factoring in perhaps a little bit more fiscal spending and potentially a more positive outlook for the U.S. economy as well. That's all being played out. And then the banks, massive jump yesterday as well, up almost 11%. 11%. JP Morgan, Goldman Sachs up 12% in trading yesterday. As we spoke about, some people are calling this a potential capital market super cycle coming up in terms of deal making and deregulation. Flipping over, though, it's not all positive. Clean energy stocks didn't do that well. This is the S&P index tracking all of these stocks globally, down 6% yesterday on concerns that the Trump administration may remove some of the tax cuts and some of the subsidies that are in place in that sector. 10-year yields, massive jump yesterday as well. We're talking about 20, 25 basis points higher in yield terms as the market accounts for either higher growth, inflation, deficits, or even a softer cutting profile out of the Fed. That is the big question mark for that market. The dollar, slightly weaker today, but again, a very strong day yesterday. One of those Trump trades that is coming through as the market starts talking about U.S. exceptionalism once again. And then Bitcoin, all-time record highs. We jumped double digits yesterday, more than 10% higher. I believe Bitcoin is something like 80% up on the year. So the crypto community, very happy to see the return of Trump here. But those are global markets. Let's also check in on how Asian markets are faring as well. Bloomberg's Yvonne Mann is in Hong Kong.
Yeah, Jumana, you mentioned about clean energy seeing a decline after, of course, this Trump win. Well, one thing that's an outlier is the Tesla stock that we saw overnight, which surged as much as 15%. Given the fact that you have this relationship with Elon Musk being one of the biggest supporters of Donald Trump, that certainly did help some of these Tesla suppliers as well, which are seeing those tailwinds from that Tesla move as well. So we're seeing that on the bottom of that board there. But then again, the flip side of that is some of the EV rivals in China, like BYD and NIO, are selling off here in the Hong Kong session here, perhaps just given that there might be a change in the whole kind of competitive landscape there, given that Elon Musk might have a bit more of a competitive edge over some of their rivals there. So you take a look at that. Of course, there's that tariff risk that is weighing on the EV sector as well. You mentioned about that slight drop in Bitcoin. We're seeing that seem to be mirrored in some of these Bitcoin stocks here in Hong Kong. So Huobi Tech, OSL Group are kind of following the moves after that, move to a record high when it comes to Bitcoin as well. And we're watching some of these shipping stocks in Korea in particular, which are doing quite well. This is, of course, as we see world leaders congratulate Trump. So the president of Korea did have a call with Trump, and they were talking about seeking cooperation. So that certainly is helping the shipping sector here this morning. Jumana?
Yeah. Well, you know, one major winner emerging from all of this is Elon Musk. I was just taking a look back at Tesla stock. It's up 19% in the last 2 trading days. So there you go. Bloomberg's Yvonne Mann. Well, Fed Chair Jerome Powell is back in Trump's world ahead of a widely expected quarter-point cut in interest rates on Thursday. It's actually Fed Day today. We almost forgot. News desk editor Jill Deesas joins us now. So, Jill, Fed are expected to cut interest rates today, but markets seem to be focusing on what's going to happen next year and how this relationship between President Trump and the Fed Chair Jerome Powell may sort of influence things.
Yes, that's right, Jumana. I don't think anyone really cares too much about the actual decision today. It's pretty well baked in that the Fed is likely going to cut. We're probably going to see another cut next month. This is all about how Jerome Powell takes his press conference and talks about the outlook going into 2025 now that, we have a Trump presidency heading into next year. What that ultimately means, I mean, this is something that the Fed and Powell really have to walk a line here. Obviously, he wants to remain apolitical about this. Trump, of course, appointed Powell to this Fed chairmanship in his during Trump's first term. We'll have to see what he ultimately says in terms of what this may mean for the inflation outlook. Trump certainly has several policies on his agenda that he would like to get passed, including some tax policies, these tariffs that we've been talking about quite a bit, which, economists pretty overwhelmingly see as quite inflationary. So I think the real trick here is how exactly Jerome Powell walks that line as he sort of talks through, this press conference this afternoon and what that may mean for this outlook in 2025.
Yeah, and some economists are actually saying that if Trump does enact everything that he's promising, we could enter into a stagflationary environment. I was taking a look at what was priced into the U.S. rates curve. At one point, December 2025 had about 200 basis points of cumulative cuts priced in. It's now moved up to about 100 basis points. That tells me that the market is also beginning to account for perhaps a slower interest rate cutting profile out of the Fed next year.
Yeah, that's right, Jemana. So look, I think that the big thing here is that, there's a lot of uncertainty about how exactly that unfolds, because there's a couple of things that you really have to look at here. First of all, it does seem like Trump is going to be entering the White House with not just a Republican-controlled Senate, but also it seems like increasingly likely the House is going to be controlled by Republicans as well. So that obviously bodes well for Trump in terms of types of policies that he wants to pass. But there's a lot of uncertainty over what exactly that looks like, how that gets done, what that trajectory would be like. And so that's certainly something that Jerome Powell and the rest of the Fed have to take into consideration as well as they kind of chart out policy, when exactly some of these policies may hit and how exactly that's going to weigh into this inflation picture.
Yeah, definitely going to be trickier for Jerome Powell next year. News desk editor Jill Deses, thank you very much. Now, traders and world leaders are taking stock as Donald Trump's victory promises to shake up U.S. energy and environmental policy with sweeping implications for oil production, offshore wind development and electric vehicle sales. And that is not even mentioning some of the geopolitical considerations as well. So joining us now from New York is Rachel Ziemba, founder of Ziemba Insights. Rachel, great to have you with us. Thanks for staying up late. I know it's been a long couple of days for everyone in the U.S. Let me just start with a question about the region that we're reporting from right now. One of the initial takes that came out yesterday was that President Trump has historically been quite hawkish on Iran. There is an expectation that he's going to go harder on enforcing the sanctions that are already in place on Iran. But equally, Iran has been quite deft at evading the sanctions that the U.S. have imposed, and the U.S. has sort of turned a blind eye. One of the big questions, I think, for the region is how successful the next Trump administration will actually be on enacting and enforcing those sanctions on Iran.
Jemana, pleasure to be with you with these sort of momentous questions. So I think there's definitely a desire from those around Trump to claw back Iranian oil production, to sort of send a message to Iran economically. It's not clear where Trump himself falls on this, right? He's been quoted recently saying that he'd like to do a big deal with Iran. There's sort of some mixed messaging. And for much of the campaign, he, if anything, sounded a bit more dovish than Harris on some Iran policy. I'm reminded that about a month ago, you and I were chatting in Dubai, and then we were talking about whether Israel would strike Iran. I think the same thing in a sense, I would say there, the regional players, I think, would like the opportunity to be able to produce more, but they don't want to do it in an environment where Iran would perhaps retaliate against GCC infrastructure or the like. Now, the real question on is willingness and ability on sanctions enforcement, right? And it's not enough just to target tankers, which is what the Biden administration has been doing. They would really need to put sanctions and restrictions on the Chinese refineries that are buying, on the Emirati and Malaysian intermediaries that are facilitating ship-to-ship transfers. Now, the Trump administration might be willing to do that. And I know there's a lot of press around Brian Hook being involved in the transition team for the State Department. He was obviously an architect. But overall, Iran has both gotten better at how to evade sanctions, and that means that blunter tools are needed. And that might have ramifications for other parts of the U.S. policy towards China in particular. But I think a Trump administration would be more willing to test out and try some of these measures, and maybe more adept at lining up Saudi Arabia to provide some additional supplies if Iranian ones came offline.
Yeah. As you've been speaking, we've been showing the price of oil and the price action there. It was interesting that on the news, oil dipped. Today, it's stabilizing somewhat. Again, so many different considerations there. But as we know, Trump on the campaign trail talked about drill, baby, drill. I've been speaking to some of the energy experts, and I was at ADIPEC earlier this week. The U.S. is already producing records amount of oil, 13.5 million barrels a day. How realistic, really, is it for those numbers to move even higher, given the environment that we're in?
Yeah, I'm skeptical that it will move much higher. What I think Trump is going to do, perhaps on day one, is try to remove regulations. Some of these that the oil industry has been concerned about, environmental regulations, that may have even more impact on other parts of the energy mix, lift the LNG, environmental ban. What it might do is not add a lot of supplies, but forestall what would otherwise be a drop off in production. Right, we've seen drilling activity slow down a little bit. U.S. producers have become more efficient, but those dynamics are in place. But at the end of the day, with this demand environment, I don't see U.S. producers being willing to put in a lot more money to get out lower sort of revenues. So, it'll be easier to drill and it'll be easier to mine, but we might not see investors pulling the trigger on new projects.
Yeah, Rachel, I was also taking a look at the clean energy ETF. It was down 6% yesterday. Donald Trump has talked about removing tax cuts, subsidies in that space. What do you see happening to the renewable energy complex?
Yeah, and renewables are historically quite vulnerable to higher interest rates, right, as well. So I think here it's not just that's part of the story. At the end of the day, Trump has talked about gutting and changing the Inflation Reduction Act and those projects. I think it'll be a little more selective because there are a lot of Republicans in the House whose districts are benefiting from these projects, and would be very wary of reducing it. So what we might see, more pressure on wind projects. Trump has been particularly critical of wind projects, and those, if anything, some of them have been scaled back already due to costs, the Jones Act, and interest rates. And we might see more of a push towards hydrogen, nuclear, other projects. But ultimately, this industrial policy of the Biden administration has been positive for a lot of Republican strongholds. And I think, therefore, it's a bit more protected.
Interesting. Very interesting perspective. Rachel Ziemba, founder of Ziemba Insights. Thank you so much for joining us today. Well, still ahead, a look at how Beijing may respond if Trump delivers on his promise to raise tariffs. We're live in Shanghai next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Trump's return to the White House risks reigniting a trade war with China. Bloomberg Economics says Trump's threat to slap tariffs of as much as 60% on Chinese goods could wind up decimating trade between the two nations. Chief North Asia correspondent Stephen Engel is in Shanghai and joins us now. First of all, Stephen, just walk us through what the reaction has been so far from Beijing to the Trump victory.
Well, you know, first of all, leading up to the election, there was very little in state media until right on the eve of the election, the day before. There wasn't much of a narrative to kind of make sure that China was not, or at least perceived to be, interfering in the election. But now, within hours after Donald Trump declared victory, we did have a Xinhua statement, that's state media, quoting the foreign ministry here as congratulating Donald Trump for winning the election. We also have other media, CNN in particular, reporting that Donald Trump and Xi Jinping did have a phone call, a conversation to congratulate Donald Trump. We don't have details or our own confirmation of that or what was said other than congratulating. But clearly, well, there's two sides to look at how Beijing views this. They probably are not happy, obviously, with the prospect of 60% tariffs on all Chinese exports to the United States, given their shaky economic recovery right now. But at the same time, they've had time to prepare for this. They've known that Donald Trump was potentially going to return to the White House, and he's been talking about those big, hefty tariffs for quite some time. So we have to see. Now we have to look at what the retaliation or what the contingency planning is going to be from Beijing.
So I thought it was interesting this morning. We got some trade figures come through from China, and they came in better than expected. So I just wonder to what extent these potential tariff increases could actually serve a direct blow to one of the stronger parts of the Chinese economy right now. We know that exports obviously are doing better than the domestic economy. How much of a blow could these tariffs constitute in light of the trade data we just got?
Absolutely. You hit the nail on the head right there, because exports have been a strong point in the Chinese economy. We've had export gains now for the last 7 consecutive months of year-over-year gains. And in October, the numbers we got this morning were quite strong, 12.7% gain. Year-over-year, we were expecting 5%. This is on the back of that stimulus, of course, we got announced at the end of September. So this is now feeding in to some of these numbers. September was 2.4, so it jumped to 12.7 in October. Quite a considerable jump. But you know what? Imports declined more than expected, 2.3%, because consumer demand still pretty weak in China, and that exacerbated the trade deficit, or trade surplus, the trade surplus, the third highest monthly total on record of $95.7 billion. That's going to definitely exacerbate trade relations with the West and other countries, as China, has more exports than imports and keeps on building up that surplus. So yeah, this all plays into that Trump narrative as well.
Yeah. Well, there's one person that we know, Tana, who's watching this data very closely, and that is Donald Trump. It's taken me back to years ago when we'd get tweets in the morning about the size of the China current account. So we're going to hear a lot more about those trade numbers. Chief North Asia Correspondent Stephen Engel in Shanghai, thank you for the overview. Well, coming up, Saudi Arabia is planning a new multi-billion-dollar AI project as it seeks to rival the UAE. More on this story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, Bloomberg has learned Saudi Arabia is planning a new artificial intelligence project with backing of as much as $100 billion. Sources say the kingdom is seeking to develop a technological hub to rival the neighboring UAE. So for more on this, Bloomberg Saudi Bureau Chief Christine Burke joins us. $100 billion in backing. Christine, what do we know about this project?
Well, Jumana, you and I were both here on ground in Riyadh last week for FII, and we know that the talk of the town was artificial intelligence, and that's where we really started to learn details about this massive new AI fund. So sources are telling us that Saudi Arabia is planning a project known as Project Transcendence. We are told that this is going to be a fund that will invest in AI infrastructure, AI startups, and also companies that are willing to commit their resources to the kingdom in order to help the country scale up in its AI ambitions. Now, we are told the ultimate goal is that this fund will ultimately have about $50 billion to $100 billion of investments. It is said that multiple government entities are going to be involved in this initiative, and the goal will ultimately be to bring in some of those bigger, more established tech companies that can bring their expertise to the kingdom. And really, all of this goes back to the Vision 2030 initiatives and to Saudi Arabia's AI strategy to be a top 15 nation in the AI space globally.
Yeah, I mean, they're also saying that this is a part and parcel of a project that will allow them to compete with the UAE, which obviously have huge AI ambitions as well. What does this mean for the AI race in the Middle East? Is there an AI race in the Middle East?
Well, both Saudi Arabia and the UAE have been racing to set up data centers and kind of position themselves as the dominant force in AI in the region. And honestly, so far, it had looked like Abu Dhabi was pulling ahead. Abu Dhabi has its G42 fund, which is a massive fund that has secured huge commitments from Microsoft. And also, we saw a deal struck back in September with NVIDIA. Abu Dhabi also has a fund called MCX. So really, those two things taken together have put Abu Dhabi a little bit on the forefront in this jockeying for that front position in AI in the region. But Saudi Arabia has been catching up. Of course, we have this new fund that we could see announced at some point soon. And then last week out of FII, we also saw the PIF, that's Saudi Arabia's sovereign wealth fund. It announced a partnership with Google Cloud to develop a new AI hub in the eastern province of Dammam. Sources told us that that initiative or that new AI hub could see investments investments of as much as $10 billion. And then the PIF and Google Cloud said that new AI hub is expected to add more than $71 billion to Saudi Arabia's GDP by 2030. So indeed, Saudi is catching up, and the race does seem to be on.
Yeah. Well, I'm going to put a question to you that I've been asking every single guest on the show this morning. How will a Trump presidency impact the AI efforts in the Middle East?
Well, of course, a great question, Giovanna. Look, I think the big question for the UAE and Saudi Arabia is how quickly they can get their hands on the most cutting-edge advanced technology for semiconductors. The U.S. has been imposing export controls on the most advanced NVIDIA chips, for example, just out of national security concerns. And it is expected, of course, because Trump carries that America First agenda, that Trump will probably carry on with export controls or perhaps even deepen them, which could create some challenges for countries like Saudi Arabia and the UAE, particularly as they try to advance their AI industries.
Yeah, I mean, let's not forget that it was under the Biden administration that we started seeing some of these technology curbs. So most likely the Trump administration will just keep them in place. Anyway, Christine Burke, always good to talk to you. Thank you for bringing us that Bloomberg scoop, Bloomberg Saudi bureau chief. Okay, a quick look at equity futures before we head into the second hour of Horizons Middle East and Africa. Futures are leaning in the green after a record end to the day yesterday. Wall Street all closing in very positive territory. The S&P up more than 2.5%, NASDAQ up almost 3% yesterday. So that is the picture. European futures, the only little bit in the red. That's it for the first hour. Stay with us for the second hour. We'll be back. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Donald Trump's comeback rolls on, with Republicans now on track for a clean sweep in Washington, D.C., as Democrat hopes of flipping the House start to fade. Asian stocks in flux as investors position for a second Trump presidency, with the promise of a steeper tariff and a stronger dollar. Plus, central banks bonanza. We get decisions from the Fed and the Bank of England today, with Trump's win firmly in focus for policymakers. Good morning, everybody. It has just gone 9 a.m. across the Emirates, the second hour of this show. I'm Giovanna Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it is just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Yeah, good to see you, Jen. So much going on in these markets, and we're going to talk more about some of the ramifications, not just for global markets, but also Middle East geopolitics and Africa as well, what the re-election of Trump means from a geopolitical perspective. But first, a quick recap of some of the major moves we had yesterday in Wall Street. S&P, new all-time high, up 2.5%. NASDAQ, 2.7%. Investors cheering on the potential for deregulation and tax cuts over there. Russell 2000, that's a small-cap index, also soaring higher, up almost 6% by the end of the day. Banks, very much in focus. We had some of the big banks like JP Morgan, Goldman Sachs, and the day about 12% higher. The KBW Bank Index up 11% as well, its best day since 2020. So some record moves in yesterday's trading session, but not everybody was a winner. Let's flip over. We've been talking about some of the reaction in clean energy stocks. Those stocks down quite a lot, down 6%. We were talking about in the first hour of the show. Yields also tumbled yesterday, down about 25 basis points. 10-year yields inching back towards 4.5% now, as the market accounts for higher growth, inflation, deficits, and even a slower rate cutting cycle out of the Fed, all of that being factored in. USD today trading slightly softer, but we did see a very strong day yesterday, its best day since 2022. The euro, you can see right at the bottom, even though it's stabilizing yesterday, biggest slide since 2016. The pound also in focus, that's shifting below 130 now. But we've got the Bank of England meeting coming up today, and a rate cut is priced in. We'll talk more about that later on the show. But for now, back to U.S. politics. Vice President Kamala Harris has publicly conceded defeat to Donald Trump. She spoke in Washington a day after the Democrats' crushing loss, urging her supporters to accept the results.
Earlier today, I spoke with President-elect Trump and congratulated him on his victory. I also told him that we will help him and his team with their transition, and that we will engage in a peaceful transfer of power.
Well, for more on Trump's re-election, Bloomberg's Vonnie Quinn joins us from New York. Vonnie, what did the polls miss that allowed Trump to pull off such a victory? We thought it was going to be neck and neck. Instead, it looks like we got a red sweep.
Really, we did, right to the bitter end, in fact, Jumana, and it's a question that we posed to Frank Luntz, a respected pollster. He says it just was turnout that voters that were supporters of Donald Trump went to vote for Donald Trump. That wasn't the case necessarily for Kamala Harris, and that bears out across the data that we're seeing coming in as well. Trump made gains in almost every demographic and almost every geography, including urban centres, places where Kamala Harris was really supposed to have a lock. For her part, Kamala Harris didn't actually make any fresh gains. She did as well in certain parts of the country as Biden did in previous times, but she didn't actually make any gains. There's also the intense feeling that the Democrats may have messaged, if you like, that really the economy was the one and only thing that voters were voting on, and that some of what the Democrats were putting forward, including reproductive rights and the protection of democracy, that may not have necessarily messaged well with voters. They just didn't turn up on the day.
And Vonnie, I know the dust is still settling a bit for many people, but what are we really on the lookout for as the U.S. adjusts to this post-election environment now that we do have an official victor, the next president?
Exactly, and we also have a Senate that has been flipped, right, Jen? So the Senate is now red. Jumana mentioned earlier that it's very close to being a red sweep. We don't know that for sure yet. The House is still in Democrats' hands. They are defending some seats, and some of those are in California. It could take more than a week for those seats to be counted and perhaps even recounted if necessary in some districts. So we won't know for some time yet whether the House stays Democrat or flips Republican. That's very important because Donald Trump's agenda would have a lot easier of a time getting through Congress, of course, if both houses were red. If one of the houses is blue, well, then there'll have to be some negotiation. There'll be some checks and balances. I would also suggest that we'll be looking out for potential personnel for the cabinet, even the transition team. We know some of the transition team, for example, Howard Lutnick of Cantor Fitzgerald is heading that up. But there will be people putting their names in the ring and also taking their names out of the ring. John Paulson, the hedge fund manager, for example, told the New York Times that he doesn't want to be considered for a post. He would have been one of those that might have been looked at. Elon Musk, of course, very likely to be offered some kind of a position should he wish to accept.
I was reading somewhere that if he does accept a position, will likely be an advisor position. But who knows at this point? Bloomberg's Vonnie Quinn, thank you so much for the reporting on a really consequential election. Now, Trump's stunning political comeback has upended markets, giving rise to clear winners and losers. For more, Mark Cranfield, strategist for Bloomberg MLive, joins us now. Mark, I've got to say I was a bit surprised looking at Asian markets this morning to see so much green on the board. And I wonder if it's a case of just focusing on the perhaps better trade numbers that are coming out now and then worrying about the Trump impact later.
I think the overwhelming feeling across equity markets is that global growth is going to be in a pretty good spot. Of course, there'll be some differences between regions and probably specific nations, but the fact that most likely the policies that we at the moment would expect from a new administration in the United States will generate even more growth in an already pretty strong American economy, and that will have a spillover to the rest of the world. And of course, at the same time, we're expecting a lot more stimulus from China as well. So all in all, from a top-down approach, global equity markets think that they're going to get a repeat of something like they saw in 2016. We're at least in the early stages of a new administration in America. It's good for everybody across the world, basically, and we can all rise with the same tide. So that's the big picture approach. Within that, of course, as you were discussing earlier, there'll be some differences in terms of some of the micro issues in terms of whether it's good for green stocks or energy stocks or all that kind of thing. But on a macro approach, most people in equity markets are reasonably happy because they're going to see more help from governments around the world. Also, central banks are in a position where mostly they're lowering interest rates and will probably continue to do so. So all in all, it's a position that favors people basically being long of equities.
Mark, let's just stick on central banks because there were a number of questions about what potentially a Trump 2.0 could mean for monetary policy independence. We have a Fed meeting today. I mean, how much does what we've seen over the past few days with the election potentially impact what we hear from Chair Powell?
Jerome Powell himself will deflect any questions. He's bound to get questions about what does a new president mean for him, but he will deflect that. He'll say he can't speculate on policy that he doesn't know about in advance. So he'll stick to the job at hand. Most likely he will deliver 25 basis points of interest rate cuts as is widely expected. The big question, of course, is December, whether or not by then the Fed is starting to think that the risk of higher inflation next year is a reason for them to take a pause. What you're seeing in the reaction in other places, particularly in Europe and the UK, is an understanding from investors that the Fed may no longer be able to do the heavy lifting. There was a point a few weeks ago when people were thinking that the Federal Reserve would cut interest rates by anything up to 200 basis points next year. That is being dialed back very quickly. And so that means that people like the European Central Bank and the Bank of England probably need to do more work in terms of lowering interest rates themselves because the Fed is going to do less. And that's what we are starting to see priced in yesterday. How much further it has to go has a lot to do with what the federal speakers have to say after the meeting today. They're in a blackout period obviously now, but when they start speaking again next week, people will be looking very carefully for any change in tone that suggests the Fed is not going to be as accommodating as they were, and that means more work for Europe and the UK.
Yeah, dissecting each and every word. Thanks so much, Mark Cranfield, strategist for Bloomberg M Live, joining us there from Singapore. Now, Donald Trump's win has also sent emerging market currencies lower as the dollar soars. For more, we're joined by Ensah Advisory, our EM reporter here in Johannesburg, who's sitting next to me. So, Ensah, you cover this quite a lot. Let's talk about the rand in particular. I mean, what are the moves that we have seen that's significant to point out right now?
So, initially, leading up to the election, we saw the rand weaken, but not as much as we did post the Trump announcement. And I think that caught a lot of traders by surprise because leading up to election, we saw Kamala Harris gaining on Trump. And yeah.
Yeah, and I mean, Ensah, do we expect more of this? I mean, you talk to analysts quite a bit. I mean, what is the expectation from the markets here? Where does the rand go from here? It was strengthening quite a bit this year.
Yeah. In fact, it's strengthened the most since in the past, since the election, since the GNU government. We saw a lot of momentum in the rand beginning to build up, and Donald Trump has the electoral victory has poured cold water to that because now people are sort of pricing in the risk of the central bank possibly stopping interest rate cuts or holding interest rate cuts for long. I mean, interest rate at this level for longer.
It'll be fascinating to see how the rest of the EM currencies perform. Ensah Advisory, our EM reporter here in Johannesburg. Thanks so much, Ensah, for joining us. Now, still ahead, we discuss the impact of the U.S. election results on markets with Global Sovereign Advisory founder and CEO Anne-Laure Kiechel. That is next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Well, Treasury yields surged as investors piled into bets that Donald Trump's return to the White House will boost inflation. Joining us now, excuse me, is Anne-Laure Kiechel, founder and CEO of Global Sovereign Advisory. Excuse me for that. All right, let me start off the interview by asking you about how you expect President Trump to impact sort of multilateral frameworks. I know you spend most of your time, your career has been spent on advising global sovereigns about their debt profile, restructuring profile. And of course, that entails these global multilateral frameworks. President Trump has tended to do things the way he wants to do things, bilaterally, unilaterally even. Are you expecting there to be a significant amount of upheaval in that space?
Look, I think it's an interesting question because I'm not sure it's going to be his priority, to be honest, one way or the other. As we know, he's very, very focused on both the tax cuts that are going to boost the US economy and probably is also going to have an impact globally. And also, of course, on tariff, which also is going to have an impact globally. So I think it's not going to be one of his priorities. I think there are some frameworks that are in place and there are some good parts of those frameworks, less good parts of those frameworks. So I would expect them to remain roughly as it is, and to just be in place and be active as they have been, rather than see any major transformation.
So, Anne-Laure, this is Jennifer here in Johannesburg. We, at least from where I'm sitting, we got a number of African leaders who were congratulating the president, as most leaders have done. I mean, when we think about foreign policy, and really, we've seen sort of a shifting in this last Biden administration to relations with a lot of African governments, shifting from just aid to investment. I mean, do you potentially see that being something that ultimately changes?
Yeah, it may indeed change with regards to investment and interest, in particular in Africa. What is going to be very, very interesting to follow is indeed the repercussion of some of the policy that Trump will have, because we were talking about interest rates. And for sure, for those African countries that have a lot of repayments to do and a lot of debt to raise in the coming years, in particular 2025, a higher rate environment, which is probably what we're going to have, is going to mean significant impact on their fiscal, which already is a fragile fiscal environment, right? And the other thing that is going to be super interesting is about the tariff, right? Because there was already some tariff influences and impact last time around when Trump was elected. But this time, it's probably going to be more significant also. And also one thing to watch here is obviously what China will do and which repercussion it will have. And is China also going to be selling more to Africa? Will it put pressure on local producers in Africa? So I think it's this global environment that we need to look for. But for sure, the pressure on the rate is not really a good news for emerging markets.
Yeah. So let me just ask you a question about the global public debt profile. I was looking at those IMF numbers released a couple of weeks ago. Staggering. They're anticipating global public debt to exceed $100 trillion, or about 93% of global domestic GDP by the end of this year, approaching 100% of GDP by 2030. Is this a ticking time bomb? Is this something that we really, when we think about, some of the headline risks to come, is this going to be one of them, the sheer amount of sovereign debt that the world is sitting on right now?
It is, but as you rightly pointed out, it's all across the world, right? So it's a global problem. Of course, there are some specificities, but it's a global problem. So we have, in a way, too much debt, but as everybody has too much debt, in a way, it kind of like makes it less of a problem because it's like everybody. But what is very clear and interesting also is that Trump policies are going to lead to an increase in debt. Also, probably what is going to be done in Europe is also going to lead to an increase in debt because of stimulus, right? As we were also saying, African country or emerging market also will need to increase their debt. And that's also probably what's going to happen in large emerging markets like China. So we are going to be in a rising debt environment that, again, is global. So more than the debt level, I would say what people should be worried about is more the liquidity and the access to liquidity, because this one is going to be a much more difficult one. So it's a little bit paradoxal, right? Because there are plenty of liquidities. But in a way, some of the countries or some of the emerging markets that would need this liquidity may find it more difficult to access it, right? So this is really one sign that we need to be watching for in the coming month and in particular in 2025.
So, Anne-Laure, how do you then advise sovereigns? I mean, you have the difficult task of then going in and delivering this message to a number of them. I mean, how do you advise them to somewhat stabilize their position if this is the situation, at least in the near term?
Yeah, so the first advice is really to be very realistic what is possible to do. Because, you know, a lot of time people speak about the need of fiscal consolidation. And of course you need to consolidate, but there is so much you can do because fiscal consolidation takes time. Also building your growth takes time, right? While you have to do some spending, immediate spending on health, education that you really need to do immediately. So you're going to take the hit of the debt before you can get the benefit of the growth and of the fiscal, right, revenues that you would have. So our main advice are as follows. Number one, just to try to get the cheapest possible financing, which means concessional financing, which makes the access to either IMF, World Bank resources or those type of organization, low rate resources, so important. So focus on this, get as much as you can, very important. Second is also to basically kind of like be very aware of the maturities that are coming due, try to address them early in advance, because if you are too close to the maturity, you're very vulnerable to the overall market environment and you may run into liquidity difficulty. And also just trying to prioritize where you need to spend. And we've seen in Kenya in particular, but not only, that some of the social aspect cannot be overlooked, right? And the fiscal consolidation is good, but the need to look into what is sustainable for the country, for the people, is also of amazing importance. And this needs to be taken into consideration in the overall policy. So in a way, I would say the economical policy is very important. There is no one answer and there is no one recipe for countries. They're all very different. They all come with a very different level of development, strengths and weaknesses. So it all need to be adapted. But the most important is to be very realistic about what could be done and about your number, and to have a robust macro fiscal framework that you can work on.
Yeah. So interesting that you also bring in the social element as well. We were covering all of the demonstrations in Kenya very closely and the political knock-on effects that has had. Would love to continue the conversation. We're going to leave it here for now, but wonderful to have you on our show today.
Thank you very much.
That was Anne-Laure Kiechel, the founder and CEO of Global Sovereign Advisory. Also coming up, a Tesla shares surge on bets that Elon Musk's backing for Donald Trump will boost the company. We'll look at the wider tech industry's fears and hopes for Trump 2.0 next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Donald Trump's return to the White House may bring a vastly different relationship with the U.S. tech industry. The president-elect plans to undo many of his predecessor's policies, including an executive order on AI, with Elon Musk also poised to play an influential role. Let's bring in Bloomberg's Annabelle Drewlers, who is in Hong Kong for us. So, Annabelle, it seems like there is a sense of lighter regulation across the board. I mean, how are tech stocks responding then?
Well, they've responded very positively to this idea. I mean, just sort of putting more context around Elon Musk's involvement in this. He's someone who tipped in around $130 million. He was very present across the campaign trail. He was putting out a lot of content on X, his platform. And so sort of the question now is, okay, he put that much in. What's he getting out of this? And we've heard from Donald Trump already that Elon Musk could take a key leadership role within the administration, and also could be responsible for cost cutting across government agencies, which could give him a particular insight into the regulatory bodies that also oversee his businesses, not just Tesla, SpaceX, Starlink, X. So the sort of perception that's really built overnight in markets is that we could see less rules moving forward. Thinking about AI, for instance, Donald Trump has been very critical of the executive order that President Biden announced last year, essentially putting rules and guardrails in place for the AI industry. He's looking to repeal some of that. J.D. Vance as well. He likes a lighter touch on regulation. He sees regulation as stifling innovation. So again, there's that perception that we could see less rules. Just briefly also to note what we're seeing in the crypto space, because this has been a bit of a different story. Really leading up to the election, President Trump, or former President Trump, was making a specific pitch to the crypto industry that he would actually put some rules in going forward, because there's been a perception that the SEC chair, Gary Gensler, who again Trump has vowed to fire on day one, that he's been anti-crypto and has more been prone to regulating through enforcement reactions than by actually spelling out the rules in the first place. And so that is actually something that Bitcoin and crypto prices generally have traded around, that there could be a regulatory environment put in place. Again, perhaps those rules end up being a bit more pro-business, but it's that clarity that has given a lot of investors and businesses in the space quite a lot of positivity. So that, again, is sort of the different way that we're looking at crypto. But broadly, it's about lighter tech touch, perhaps, or lighter regulatory touch for big tech.
Yeah, it definitely appears to be the case. And Bitcoin up 80% in 2024. So quite a staggering price climb this year for the cryptocurrency. Bloomberg's Annabelle Jewelers in Hong Kong, thank you so much. Well, this is what futures are looking like as we head to the break. All of the markets are leaning towards the green, even European futures, which are at 1 point negative. And coming up, we're going to talk more about world leaders' reaction to Trump's re-election.
This is Horizon's Middle East and Africa, our top stories this morning. Donald Trump's comeback rolls on, with Republicans now on track for a clean sweep in Washington, D.C., as Democrats' hopes of flipping the House start to fade. Asian stocks in flux as investors position for a second Trump presidency, with the promise of steeper tariffs and a stronger dollar. Plus, central bank bonanza. We get decisions from the Fed and the Bank of England today, with Trump's win firmly in focus for policymakers. It has just gone 7:30 a.m. in South Africa, where I am. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to the second hour of Horizons Middle East and Africa. Typically, Jen, I would be super excited about today because we have not one but two central bank meetings coming up. But we're not talking about that. We've been talking about the market reaction to Trump's re-election.
I know it's a bit of an overhang to what is happening with the central bank bonanza, but still notable in terms of what we're seeing with the markets in reaction to that election. And let's just take a quick look, Jumana. As we were mentioning earlier, of course, we are seeing U.S. equities still tilting in the green, looking like they are pointing towards a higher open later today. If we start with S&P futures on Wednesday, they saw their strongest day. The S&P surged 2.5%, its best post-election day in history, continuing that strength very clearly. The NASDAQ also extending its gains, with futures right now. We saw Wednesday again advancing at 2.7%. We're also paying close attention to yields. We were just speaking to our guests there about potentially what we're seeing with deficits globally. Potentially, what does a new Trump presidency mean for the budget? Right now, we're seeing 10-year up above 4.4%. And I also want to pay close attention to this because emerging markets are, of course, trying to digest what this means. This is just a year-to-date chart of the MSCI Emerging Market Index. But what we saw on Wednesday, after we did get clarification that Trump would be returning to the White House, we did see the index fall about 0.7%, dragged lower by Asian equities, but also a number of equities across emerging markets just still trying to digest what potentially this could mean for their own economies. Now, Donald Trump's stunning political comeback has upended markets, as we were just saying, giving rise to clear winners and losers. For more on this, let's bring in Mark Cranfield. He is a strategist for Bloomberg M Live, joining us now. So, Mark, let's just stick on Asia. I mean, what reaction are we seeing in Asia that's significant?
Well, mostly the Asian equity markets are pretty happy with what they've seen so far. They're reading it in the sense that if the U.S. economy is going to do a lot better, or even better, under Donald Trump policies next year, that's going to be good for global growth. And so that will obviously spill over towards Asia as well. So generally, they're pretty comfortable with that idea. Although Asian currencies have weakened, it's not too dramatic. It seems to be relatively contained. So they're getting a double whammy here, where their currencies are slightly better at helping their exporters, and at the same time, they're feeding off this growth narrative coming across from the United States. So at the moment, they're fairly happy with that. The tricky part for Asian markets is probably going to be how they respond to the Federal Reserve. If we get the messaging from the central bank in America that interest rates are not coming down as quickly next year as was thought just a few weeks ago, that will certainly cloud the outlook for Asia into next year. But for the moment, people don't want to focus too much on that. They want to be more interested in what they see for the next few weeks. And if you think of the playbook back in 2016, the first time that Trump won the presidency, for the first several weeks after the vote, markets did very well, particularly equities. Currencies also had a pretty decent time as well. So that's something like what we're seeing play out at the moment.
Yeah, Mark, I've been, well, actually right now we had a table of how yields have been performing. 10-year yields obviously seeing a massive move yesterday north of 20 basis points. And investors are sort of repricing the cutting cycle that's to come out of the Fed in 2025. How does that all get factored into global financial markets and the fact that maybe looking ahead, the Fed will have to be slightly more cautious on the interest rate cutting cycle?
What the conclusion they're jumping to initially is that some of the expectations in terms of an expansionary policy that could come out of the United States next year will mean that base inflation goes higher. So the Federal Reserve have been able to get themselves into a position of lowering interest rates because inflation has been coming down nicely towards their target zone, and that's what traders have been pricing for, and that's what they're expecting. That could change quite significantly if people think that the inflationary impact will be delayed into second half of next year maybe, and then the Federal Reserve has to respond to that situation. So that is really what we're reconsidering now. How much will an expansionary US affect the inflation outlook, in turn changing the narrative for the Federal Reserve Central Bank? If that's the case, interest rates, particularly at the long end, will stay higher for longer because America will probably also be issuing more bonds as well. There'll be a bigger cushion to absorb that higher inflation. We get a steeper yield curve, which is starting to happen. It was much steeper in 2016, but we're beginning to see signs of it happening again now. But that's clearly what is being projected, is that high yields for longer.
Mark Cranfield, our strategist for Bloomberg MLive. Mark, great to get you on. And let's just stick with the Federal Reserve because Mark was just telling us there it is really about the narrative then. The first half of Jay Powell's day today looks potentially straightforward, with the Fed widely expected to make a quarter-point cut to U.S. interest rates. The second half, though, where he's likely to face a barrage of questions about the next president, could be a bit more complicated. Let's bring in News Desk editor Jill Desis, who's joining us now. So, Jill, what can Trump actually do to sway the Fed? I mean, he's sometimes suggested that he makes comments about Chair Powell in particular and the independence of the Fed. But is it likely that we'll hear anything from Chair Powell about where he stands at this point in time?
Hey, Jen. Yeah, I mean, look, I think that with this press conference today from Jay Powell, I mean, look, he wants to stay as apolitical as possible, but obviously we're all going to be watching this press conference incredibly closely to see if he gives up anything on, what the direction is going to look like going into 2025. That being said, I mean, look, Mark just kind of alluded to this, but we're kind of waiting to see what exactly these policies out of a new Trump administration ultimately look like. I mean, he's obviously talked, the incoming president has obviously talked quite a bit about the fact that he's got, some pretty significant tax cut policies that he wants to implement. We've all heard these tariff policies, including potentially upwards of 60% tariffs on goods imported from China, are in the pipeline. It all depends really, though, on how much of that he's able to actually affect into law, and then how much of that is actually, what kind of timeline we're looking at. As we've seen, I mean, we're looking at a pretty clear sweep of legislative chambers. The Republicans are taking the Senate. Looks like they're likely to take the House, although we might not know for certain for another few weeks. So there's a lot of this that comes down to timing and ultimately what's passed when and how that ultimately impacts the inflation picture. What actually Powell says, I mean, he's in a really tricky position where he's got to kind of position what the Fed may do going forward, but he's got to stay, kind of open and, a bit cautious there as well.
Yeah, I mean, the thing is, the world has changed in the last 24 hours, right? And whatever anyone thought the Fed were going to do in 2025, I think everyone's having a rethink about what Trump's potential policies could mean for the direction of travel for the U.S. economy. How is that likely to get factored in to some of the statements and the questions that are put forward at the press conference today? Are we going to get any color from the Fed chair about how he views the path ahead and vis-a-vis tariffs, protectionism, and all these other policy initiatives that Donald Trump has spoken about?
Well, Jumana, we'll ultimately see what Jay Powell says at this press conference. Again, I do think that he wants to be a little bit cautious because, for whatever Donald Trump has said about what he wants to enact, we actually have to see how much of that, does take place, whether or not we have got a House of Representatives that's favorable to those kinds of policies. I will say, obviously, Jay Powell was put into the Fed chairmanship by Donald Trump during his first term. He's used to working with Donald Trump, dealing with Donald Trump, hearing what Donald Trump has to say about Fed policy and all those kinds of things. So, I'd have to imagine that, somebody in Powell's position certainly has that kind of relationship of, kind of working with a, pretty unorthodox U.S. president. How that ultimately, weighs into statements that he's making, I wouldn't expect anything that's, overly aggressive or candid or anything like that. But I would expect, sort of like a cautioned, reasoned, kind of Jay Powell, who at least has to acknowledge that, that they're looking at the outlook going into 2025. But as to how much detail we're actually going to get, we'll have to see.
Yeah. Jill, thank you so much. All eyes on the Fed. It'll be 11 p.m. in Dubai. I'm not sure I'll be up that late, but I'll definitely be here tomorrow morning to talk about it. Jill Desis, our news desk editor in Hong Kong. Well, world leaders are reacting to Donald Trump's election victory, with his return to office reshaping the geopolitical landscape and posing both risks and challenges across key regions. Joining us now is Syga Thomas, CEO at Ensah Advisory Partners. Good to have you with us. So, the number one topic that people have been talking about since Trump's re-election victory became apparent is the word tariffs. And because he has extensively spoken about his love of tariffs, he even told our editor-in-chief that tariffs was his favorite word in the dictionary. But here's the thing. Trump administration introduced tariffs on China, but the Biden administration actually kept them in place. Why is there not more recognition of the fact that actually both sides of the aisle have been supportive of tariffs?
Good morning, Jumana and Jennifer. Thank you for having me. Yeah, Trump has come out, as we know, President-elect Trump, as we must refer to him now, has come out and he's been very clear and clairvoyant and said that, he expects to level 60% tariffs on Chinese goods and 10 to up to 20% of all other goods coming in to the United States. As we know, President Biden, when he was elected, he did not go away with those tariffs. Those tariffs were remained in place and actually extended under Biden, which really gives Trump the room now President Trump the room now when he comes back into office in January to go further with those tariffs. I think that's why you're going to see a China that's going to be a little bit worried because obviously they know that Trump sort of started those tariffs back in 2017. I think most economists have come out and said that tariffs can lead to inflationary pressures, and we will see those effects, especially for the middle class here in the United States. But certainly it's going to be popular, and that's going to be one of his tools that he's going to use very quickly when he's back in office.
So, Syga, we've talked about a lot of the obvious players that are going to be affected potentially if Trump does continue on with these tariffs, China, Mexico, and elsewhere. Are there other parts of the world potentially that this could spill over? I'm sitting here in South Africa in particular. There's AGOA, which is a big trade relationship that the U.S. Has touted for years with Africa. Are there other parts of the world potentially that we're not yet seeing the effects of how this could potentially impact them?
Yeah, I think Europe. Is one of the big targets that potentially could come to play in the next several months. I think with Europe, though, I think it'd be a little different. You're not going to see sort of 10 to 20% tariffs across the board, on January 20th when Trump comes to office. But certainly you can see targeted tariffs, and by certain items where Trump, President-elect Trump, really looks at things in a bilateral way. So I think that every country is going to be looked at and examined to see is there a sort of discrepancy in the bilateral trade agreement with that country. And I think that it's going to leave anyone open for potential tariffs, which obviously most economists would argue would be very negative for the economy.
Yeah, well, you mentioned Europe, and obviously there's still a war raging on the continent. Several years now of Russia's war in Ukraine. I thought it was interesting that the NATO Secretary General sent congratulations to Donald Trump yesterday, but also President Zelensky, who surely must be feeling the heat now because Donald Trump, after all, is somebody who has praised Russian President Putin, but then also has been very critical of the U.S. Economic and military support that has been provided to Ukraine over the course of the last couple of years. How do you think U.S. stance towards Ukraine changes under Donald Trump?
Well, I think what many world leaders did, which was very important, was while Trump was running for this election, they met with him. And as we know, President Zelensky has spoken with Donald Trump, President-elect Trump, within the recent months. I think that obviously Zelensky is a big loser in this election because President Trump is very, very straightforward and said that sort of President Zelensky is the biggest salesman out of anyone out there. And I think that he's going to look for some type of ceasefire rather quickly. I know he stated that on day one in office, the war would be over. Now, how that is actually implemented, I think most analysts, such as myself, we're sort of waiting to see how that would happen. But certainly there would be a sense that maybe he would go to Russia and say, listen, this war needs to end right now. And the gains you've made into Ukrainian territory can be stayed. And that's obviously not going to be something that Ukrainian officials are going to like, or really international analysts alone would sort of go with. But, you know, what options does Zelensky have? Obviously, the U.S. is the major supporter of Ukraine. Europe is still not able to sort of hold its boat. If the United States did away with its aid to Ukraine, I don't think anyone believes that Europe would be able to step up and fill those shoes. So Zelensky is going to have some tough choices to make. And I do take President-elect Trump at his word that he is going to try to end this war really quickly. Now, the question is, what does that look like for both sides?
All right, unfortunately, we have to leave it there. I could speak to you for quite a while, but really appreciate your insights. Syga Thomas, CEO at Ensah Advisory Partners, they're joining us in London. Now, coming up, we look at how prepared the EU is for the return of Donald Trump. We are live in Budapest next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. About 50 leaders from across Europe are meeting in Budapest for the European Political Community meeting. The gathering is the first opportunity for the leaders to discuss in person Donald Trump's win. SPD Foreign Affairs spokesperson Niels Schmidt spoke about the upcoming challenges of a Trump presidency to the European economy, as well as coming up with a plan to incoming tariffs. And the expectation is that more tariffs will be applied to the European continent. For more, Bloomberg's Oliver Crook joins me from Budapest. Well, it seems like there's just going to be one topic ahead of the leaders who are convening at this European political community discussion, and what a Trump administration means for Europe, how they can potentially retaliate if the Trump administration goes down the line of imposing extra tariffs. And then also, my one question for you is, why are you at a football stadium?
Yeah, well, Jumana, you've asked a series of very good questions there. And we should just say that the European Political Community meeting, which is being held here in Budapest, about 50 leaders from across Europe, is being held in this stadium, football stadium here in Budapest, one of the ones that was built under Orban, probably in order to show it off. You can see it here. It's very nice. But really the sort of seriousness of this is the fact that Trump now being elected in the United States is basically the dominant agenda item here. And let's remind people that the European Political Community, this is the most expansive sort of group of European leaders meetings that we have. It was devised by Emmanuel Macron, and it was really in response to the war in Ukraine. You now have had a fundamental shift in the power balance, potentially, for the war in Ukraine. Let us remind everybody, we have heard from Donald Trump on several occasions that within 24 hours of being elected, not taking office, being elected, he will find a resolution to the war in Ukraine. And many who support Ukraine anticipate and fear that that means a deal where land will be surrendered. So I spoke to the Estonian Prime Minister last night here in Budapest about his concerns. Remember, Estonia is one of these bordering countries of NATO. Here's what he had to say.
If you allow Russia to change borders by force, and they're saying, yeah, we will give half of your country to you back. So it's not acceptable, I would say, to Europe. It probably will be a stigmata for a long time.
And for the leaders that are meeting here in Budapest, really the question is going to be for them, because what Donald Trump, you have to take seriously, but do you have to take it literally? That will be the question on Ukraine. That will also be the question on trade and tariffs. Remember, these tariffs that Trump has threatened, 10 to 20%. I spoke to a government official yesterday that the only European response has to be retaliatory tariffs and to play hardball. But again, this is a sort of a forum for all of these leaders to discuss about how exactly they're going to take on a Trump administration.
Oliver, could this potentially drive the bloc closer together? Is there any expectation that we'll hear any sort of rhetoric alluding to that?
So listen, I think we will hear a lot of rhetoric alluding to that. And the problem is going to be, will that actually materialize? And that is going to be the question between all the leaders here. Let's not forget where we're holding this meeting. We're holding this meeting in Budapest. Orban is riding exceedingly high. His sort of tagline for his presidency of the European Council is "Make Europe Great Again." That is impossible to misinterpret. There are concerns here that potentially Donald Trump will be piped in through a video conference, sort of catching leaders off guard. That is where you could draw the wedge. The other point that the European leaders will make, however, is that actually, as the Estonian Prime Minister told us last night, that Europe has gotten basically overweight. They need to work out, and Donald Trump might be the person to inspire them to do that.
Interesting, and interesting still that you're in a football stadium saying that. But going to be fascinating to hear really how these leaders convene together. Bloomberg's Oliver Crook in Budapest there for us. Oliver, thanks so much. Now coming up, markets expect the Bank of England to cut rates today. We discuss the impact of the UK budget and of Donald Trump's win next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Markets expect the Bank of England to cut rates later today, but it's a decision likely to be overshadowed by the fallout from the UK budget and, of course, Donald Trump's election victory. For a preview, let's go to Lizzie Burden, Bloomberg's UK correspondent, standing by in London for us. So, Lizzie, set us up for today's decision and the impact of a Trump presidency.
Well, Jen, the Bank of England is not going to want to make any surprises today, given all of this uncertainty in the world. You've got 54 out of 54 economists in our survey expecting a quarter-point cut today, the second of this easing cycle from the BOE, because you have got inflation back below 2%. But as you say, we've had some spanners thrown in the works recently, and that makes the focus very much the future path for rates today. So last week we had this budget from the Chancellor Rachel Reeves, the biggest fiscal loosening in decades. You remember the gilt market reaction off the back of that. Actually, it's wiped out her headroom, and it means that even more tax hikes are likely in the future. So that is likely to affect the BOE's rate path one way. The other way is, of course, we've had the US election yesterday with Donald Trump. And in fact, we saw JP Morgan cutting their growth forecast because of the hit to European growth from tariffs, as you were just discussing with Oliver Crook. So perhaps you could see an impact on UK BOE rates as well from that. Conflicting. However, when we look at this decision today, it's going to be too late to see the presidential impact on the forecasts. So really the focus very much on whether inflation and growth are upgraded because of the budget. And we'll really have to listen to Andrew Bailey in his remarks when previously, of course, he said that there would be more aggressive policy to come. Do we see him rowing back on that, given the conflict with the chief economist, Hugh Pill, who's actually been a lot more cautious?
Yeah. Lizzie, going to leave it there. Thank you so much. Lots to watch out for later today. That was Lizzie Burden, Bloomberg's UK correspondent. This is how futures are setting up as we head into Daybreak Europe. It is a sea of green out there. Thanks for watching our show. I'm Jumana alongside Jennifer Zabazaja.